identifying those smaller subsets of the entire scope is what makes up that. Also looking at alternate data sources like providers of payroll data, provider of telco data.
And there's infrastructure as well to collect back that loan, because of course they want to get back their money.
Very important. We would explore how there are lots of collection methods that are,
looking at an SME that they want to lend to. They are mostly interested in the cash flow. How much
you have to. What do you think about business credit? A lot of people talk about or hear about credit infrastructure, lending, buy now, pay later. What do all those things mean? What modules are involved and who are the players? Nifemi.
Thanks a lot for the question. So I think I would start with credit infrastructure, and I'll try to explain that the way I've come to understand it, right? For credit to happen, I see that there are a lot of players that come into play, right? Whether they're the players that you see on the surface or there are players that are enabling stuff at the background. However, identifying those smaller subsets of the entire scope is what makes up that infrastructure. So you're talking about financial institutions, right? Or lenders, which you can break down into bank and non-bank financial institutions. Then you're taking a step further to look at data source providers like the credit bureaus, alternate data sources like the guys who now provide us with open APIs, Okra, Mono, my bank statements. You're also looking at alternate data sources like providers of payroll data, provider of telco data. So I think it's a myriad of small facets that now come together to form what we can call that credit infrastructure. I don't know if Tokwe has anything to add before I talk about the other things you mentioned.
Tokwe, do you have anything to add?
Yeah, just to add, he's mentioned some of the players in the space, but after that lender or that business has decided that they want to give you a loan, there's also infrastructure to disburse the loan. We have the payment gateways, Flutterwave, Paystack that can disburse the loan to you, and there's infrastructure as well to collect back that loan, because of course they want to get back their money.
Very important.
Very, very important, actually. There's card-based collections. Paystack and Flutterwave, are powering that right now. We also have account-based collections. Nifemi mentioned Remita earlier. He also mentioned Okra and Mono that are doing, account-based collection in the credit space. But then we also have, those guys, collection agencies. When the loan goes into default, sometimes lenders want to employ these agencies to collect on their behalf. One player that I know of right now is called P3. They say they're an ethical collections agency.
It was good you mentioned ethical, because later on we would explore how there are lots of collection methods that are, unethical. But let's delve more into the subject matter, right? There are different kinds of loans or different kinds of credits, and I want to group them broadly into business credit, and they have their various kind of products, and also consumer loans or consumer credit. Can we talk a bit about those? Temitope, what do we have to say about business credit?
Business credit is you would term it more SME financing. We have lenders who focus more on giving loans to small businesses. Small businesses part of our economy. I think the thing lenders usually would want to look for with lending to small businesses is because the money that comes in, their financial transactions are not exactly very structured, like with a salary earner, where you can bet against a steady amount that comes in. When a lender is looking at an SME that they want to lend to, they are mostly interested in the cash flow. How much money is coming into that account, how much money is going out, and primarily, what is the spending on? Is this person spending on the business or on frivolities, for example? And trying to get what is the average balance that is in that bank statement or in the financial transactions of that business that it can bet against in terms of collections.
Okay, I want to expand that thought a little bit more, because I think from what you said something very important, that small businesses power the economy. So Nifemi, I'll be directing this question to you, right? I think that the kind of lending we do in the sub-Saharan Africa, or maybe Nigeria to be specific, is quite elitist. It's too safe and it's focused on a specific kind of category. And if you don't fit into that category, nothing for you, right? But for SMEs, we have people that are moving companies in themselves, moving brands, and we even have institutions that sort of facilitate people creating their moving companies. They are referred to as influencers. Most people have left traditional type kind of markets, and even in fintech, to leverage these brands, to market their goods. And these people are bankable. The kind of credit we have today, how do you think they fit into that structure of providing this kind of people the credits that they need, since they are growing? The comedians XYZ, we can, name some names, but we don't have to. What do you think about business credit and this type of individuals?
Yeah, I do think that, to a large extent, before now, maybe if they had approached commercial banks, it may be a bit tricky, right? Because like Temitope mentioned, it's safer when you're giving out loans and you can beforehand assess that there's a steady amount of inflow that comes into this account at regular intervals, and it helps you to sort of project their affordability and their propensity to pay back. But what you then find is that in the more recent times, with the digital lenders that we now have in the space, in the last, say 5 years thereabouts, the likes of, Carbon, formerly Pay Later, the likes of Branch, the likes of Fair Money, the likes of Palm Credit, they've gone a step further, and a lot of the credit assessment that they now put into play is designed to support unstructured earnings, right? So as opposed to looking out for just salaries and all those things, there are a bunch of other information or data sets that they are consuming to make lending decisions. They are leveraging all types of inflows. So like you said, this kind of people that have unstructured, yes, it may not be a regular interval earning, but at a defined period, say maybe a 3-month period or a 6-month period, you can track the total inflows that come in based off of their behavior. You can make some deductions. I also like to sort of break down the different data sets that these digital lenders now make use of, right? Beyond bank statement, they're looking at things like demography. They're looking at behavioral patterns. They're going further than the regular bank transactions to even other smaller transactions like airtime, bill payments. All these things help to sort of create some level of profiling for them. And at the end of the day, right, irrespective of the person's actual identity, based on the information that they have, they're able to then make lending decisions. So at the end of the day, everybody can get a loan, right? As long as you're not a defaulter that has bad credit history, almost everybody can get a loan, no matter how small.
Okay, that was very comprehensive. Thank you. It looks like we moved from business, talking about business loans, into consumer loans. So I want to ask a question.
What you find is there's a very thin line, between the SME loans and the individuals, because a large portion of these SMEs that we're even talking about is unstructured. So you find that a lot of their finances intertwine. They present their business accounts, you see that not much is happening there. By the time they present their personal accounts, you see that that's where the real bulk is coming.
I agree.